Hello, this is Sergio Marrero, and you're here at RBL1 Live with Ariel, who is general partner at Brainstorm Ventures. So thanks you for joining us, Ariel.
Thanks for having me.
Yeah, so excited to dive in tonight. Ariel has been a mentor and a good friend throughout this venture journey, but excited to dive into his background. For those that don't know, he's a graduate of University of California, Berkeley, so hailing from the innovation ecosystem of California, went to Georgia Tech for a master's degree in industrial systems and engineering, got his MBA from Wharton, and is now general partner at Brainstorm Ventures. So just kicking it off for the audience, can you share a little bit more on what is Brainstorm Ventures?
Yeah, sure. So Brainstorm Ventures is me and my partner's seed stage firm where we invest in technology startups. One thing that's unique about us is we invest both in the US and in Mexican startups. And yeah, I mean, Brainstorm's actually about 20 years old, a little bit more. Our first funds portfolio included Zappos, OpenTable, and a company called Kio Networks, which for many years was Mexico's first and only unicorn. Fortunately, that changed last year, and I think there'll be many more to come. And yeah, we've been investing out of our second fund now in 2018. So there was a big gap between funds 1 and 2 that we can chat about. And we've made 15 investments so far in our second fund. And yeah, I can talk a little bit about more what was happening between funds 1 and 2, since that's a little bit atypical for a VC fund to have that large of a gap, if you'd like. Or
Yeah, well, let's also sharing with the audience. I know there's some founders there, but if you can share a little bit on what type of ventures are you looking for? What size check do you normally write? So we know which founders to send your way.
So we're generalists sector wise. That being said, we do have our kind of investment themes of interest that evolve over time. In Fund 2, we were really focused on future of work companies, and then we also made a number of investments in companies that were kind of at the intersection of medical devices, wearables, and kind of machine learning, big data. We look at a bunch of stuff that's in kind of hospitality tech, prop tech, and we also have done a few investments in fintech. But again, we're generalists. And then in terms of check size, we typically invest small checks to start, so 100K, 200K to start, and then we re-up in a more meaningful way in those few portfolio companies that are, really showing strong traction out of the gate.
And I think from your description, why did you pick US and also Mexico? What was the relationship there, or why does your team focus on that?
So my partner who founded Brainstorm is Mexican, and then I also have my family's from South America, from Argentina, but over the years I had established some interesting relationships in Mexico. So together we had pretty strong access to LPs and deal flow in Mexico. So Fund 1 was US Mexico, and it made sense for Fund 2 to be the same. And then we're bullish on Mexico and the Latin American region as well. So
excellent. And if you could share a little bit of the story about you, about how you ended up in this area. I know you're an industrial engineer, and I was as well. Did you always know you wanted to be in venture capital because you were in Berkeley, or what? If you could share with the audience a little bit of more about that story. How did you end up shifting into venture?
Well, it's funny. I forget the name of the class, but at Berkeley there was an engineering class that was like venture capital for engineers. That was sort of a project-based class where we started a company. Well, we came up with a business plan and then pitched it to some angel investors at the end of the semester. So that was my first kind of exposure to venture. But no, I mean, I went to business school thinking I wanted to do strategy consulting. Did that for a couple of years, didn't like it, to be short. And while I was in business school, I had gotten a little bit more exposed to venture capital. While I was at Intel, actually, before business school, I almost took a job at Intel Capital, but ended up getting promoted in the group I was in, and turned that down, which might have been the wrong decision. But once I realized that strategy consulting wasn't for me, I started thinking that, maybe kind of venture capital growth equity would be a better fit for my, just kind of the way I like to operate. And that's kind of how I started making the transition. And, to dive in a little bit more, I decided that the two areas that would make most sense for me, given my background, was in impact investing or in funds that were either based in or focused on Latin America. So, I went through the drill. I went through the exercise of creating a bucket list of funds in both of those categories. And then kind of, long story short, ended up at a impact investment fund back in 2009, 2010. And as it happens to be, one of the managing partners at the impact investment fund is my partner now. He was the founder of Brainstorm Ventures. So we kind of together transitioned into fund two for Brainstorm Ventures back in 2017, 2018. But we had been making some investments out of the management company for several years before that. So, I would have never guessed that I would end up both at an impact investment fund and a fund that had some kind of exposure and focus on Latin America. But it's been great.
And how are you defining impact?
Yeah, so obviously there's a whole continuum of impact investment funds, right? There's some that I would say are kind of questionable at best, and it might be more of a fundraising tactic. There's others that are, impact first, really mission driven, intentionally sacrifice returns. I joined a firm called Pacific Community Ventures, which was one of the first growth equity impact investment funds in the U.S. And what our definition of impact was pretty specific. We invested in companies that created quality jobs and wealth in lower income communities. So we invested in, for the most part, brick and mortar companies, but companies that had a inherently labor intensive business model. And, therefore, as the company scaled, they would create more and more jobs. And we only invested in companies where the CEO or the founders were kind of aligned with us in terms of valuing their employees, providing better pay, better benefits, better professional development opportunities, et cetera. And one thing that we pioneered at PCV, which was sort of our secret sauce, is that we forced an equity set aside for the hourly employees in every company we invested. So usually it was somewhere around 3 to 5% of the cap table was set aside for all the hourly employees, so that when there was a liquidity event or an IPO or what have you, all those folks would benefit as well. So yeah, and that was the only thing we could really control post exit, right? Because if a multinational or the company IPO'd and there's new pressures, they ship manufacturing to China, we're out of the picture at that point. We have no way of controlling that. But what we couldn't control is that at least the folks that were working at the company while we were investors, had a wealth creation vehicle in place and were able to benefit just like everybody else.
That's great. It's really interesting to hear you were almost looking for the opposite of what many ventures look for, right? It's like you said, I'm looking for many humans, right? To leverage and not as scalable ventures, but still, a model where you could put in capital, grow those businesses, and then also create the impact. So
they needed to be scalable, but they needed to be labor intensive at the same time. Exactly.
Okay. Amazing. So in that regard, were there any patterns there, scalable and labor intensive?
Yeah, I mean, if you think about, manufacturing companies that are vertically integrated, we tended to invest in companies that were branded, kind of consumer focused. So if they're vertically integrated and they're producing their own equipment. So we were early investors, for example, in Timbuk2 bags. So for a long period of time, they were manufacturing those right in California. The company was acquired. Huge exit for the founders, for us, and also for the hourly workers. We invested in a restaurant chain called Pacific Hatch. For those of you that are in the Bay Area, that's done extraordinarily well. Restaurants are labor intensive, right? Every time they open a new restaurant, that's 100 new jobs. So there's some models out there, right, that are both scalable and labor intensive. You just need to find them, and it's usually they're not obviously software only type companies. But
excellent. And why did you guys, meaning you and your partner, shift off to make Brainstorm Ventures separately? What was different about that?
Yeah. So my partner had founded Brainstorm Ventures after a successful exit years before PCV. He's about a dozen years older than me. And so Brainstorm always existed. And it just happens to be that it's me and him that ended up running the impact investment fund. And then when our third fund there was done, we decided to transition back to Brainstorm Ventures instead of raising a fund four at PCV.
And what was a little bit of the strategy around that? You mentioned the timeline between one fund and another. If you could share a little bit about the
Yeah.
on
So,
that.
fund one, again, really successful fund with OpenTable and Zappos. There was a tech bubble burst. So particularly for a vintage 1999 fund, they did extraordinarily well. But the tech bubble burst, 9/11 happened. My partner, the co-founder of Brainstorm Ventures, serial entrepreneur, got the itch, ended up launching a bunch of both tech and non-tech companies. My partner wanted to do something more impactful, joined PCV. That's how we met, managed Fund 3 together. And then we just saw an opportunity to go back to Brainstorm Ventures, both in terms of being able to raise a fund and the deal flow that we were seeing, that at that point in time, it just made more sense for us to focus there instead of raising another fund for PCV.
Excellent. And in terms of on that journey of raising the next fund for Brainstorm, what were some of the challenges, and how'd you make it through that?
Yeah. I mean, I think it's interesting because, at PCV, we have very kind of blue chip LPs, where CalPERS, CalSTRS, many of the big banks like B of A, Wells Fargo, Citi, some large foundations, where Brainstorm's always been a smaller fund where it's, small family offices, high net worths, a couple of other outlier LPs, but the majority are kind of high net worths as opposed to large institutional LPs. So kind of making that shift, right, from PCV, where we were managing these institutional LPs, back to kind of the high net worth world. And then the other piece was that, the track record my partner had at Brainstorm at that point was old, right? I mean, Zappos and OpenTable are kind of old success stories. So it was conveying that to folks. We ended up raising the money. I'd say the overwhelming majority of that fund, we raised it from people that were kind of in our network or maybe one degree of separation away. So that made it easier. We're actually starting to raise Fund 3 now. So now it's, I think we're in a better place because we have a recent track record, and some of our Fund 2 companies are doing, fortunately, extraordinarily well. So I think it'll be a little bit easier this go around. But yeah, I mean, it was challenging.
And also the last the last 2 years have been unique. If you could share a little bit about how what's changed for you in how you invest or how you find founders and select them.
What's funny? I think for us in particular, things haven't changed as much as they have for most VC funds. And that's because my partner and I were already operating kind of on a semi-remote model. We have an office at the Embarcadero Center in San Francisco. We hardly ever use it. Usually, we only use it when we're bringing more kind of traditional LPs from Mexico that like to see a conference room and they're a little bit more formal. For the most part, we were, working out of Starbucks, working remotely, meeting with founders wherever, even before the pandemic. Obviously now that's shifted entirely to Zoom, but it hasn't changed that much for us. We had made investments in companies that we had never met the founder in person before, which I don't think many VCs had done. And yeah, I mean, I think the other piece is that, we had this investment thesis around future of work, and the pandemic really accelerated that vision, right? So a lot of the companies we were looking at were really well set up to, I hate to say it, but benefit from the pandemic or take advantage of the kind of new normal. So things have kind of worked out in that way. There's a few of our companies that were focused more on brick and mortar sectors, and they struggled obviously during the pandemic because they were focused on retail. We have an investment in a company that's disrupting the commercial office space industry, so obviously suffered tremendously in the last year. But for the most part, our portfolio has done pretty well. And we haven't changed our mode of working much either.
And when you no, that's great to hear, and it'll be interesting as some folks go back to in person and some stay virtual. I always say to folks the same is that that I was operating virtually before, and then a lot of people are just adjusting to. I think what's weird is I always say to folks, I was like, this is how I was doing business before. It's weird that everybody else is now. So that's the definitely the challenge. You mentioned that the firm is generalist, and I know one of the challenges in being a generalist firm is having various expertise, right? You mentioned focusing on real estate or prop tech. I know from your recent investment, you're focused on neuroscience as a service. And how do you develop expertise or vet very different startups across the different industries?
Yeah, no, it's a good question. In some cases, we're very familiar with the sector, and we kind of rely on our own intuition. In other instances, we rely really heavily on folks that are really close to us and experts in the space. So we have a group of advisors. Everyone says they have advisors, but these are folks we've known for a decade or more. Have kind of economic interest in the fund. They help us vet a lot of the companies, and then other folks that are close to us help to vet others. In some cases, for example, the company you're mentioning, Immersion, right, which is kind of distributed neuroscience as a service. We're not neuroscience experts, but in terms of the industries that they're targeting, we know folks that have a lot of interesting connections there, and I think that's part of why Immersion, was excited to partner with us as we were to partner with them, and that we can make some interesting introductions for them. For example, Immersion, their technology aligns really well with the priorities of folks that are kind of in content creators, right? So media companies. My partner's brother used to be the chief technology officer of Televisa, huge media company in Latin America. So we were able to do some interesting pilots as part of our diligence with folks from Televisa, but then B, there's obviously interesting opportunities for Immersion now on the business development front there. So, we lean heavily on folks that are close to us.
Got it. One and very specific question for the emerging fund managers out there looking at portfolio construction and check sizes. I know there's always this tension of, the size check you write, whether you sit on a board, how many GPs you have. For Brainstorm Ventures, how do you all think about your portfolio strategy?
Yeah. So it's funny because at PCB, we had board seats in every company. So I still sit on the board of 2 companies that are kind of old PCB companies, as does my partner. At Brainstorm, in the 15 investments we have in Fund 2, I think we only have 2 board seats. So, since we're writing small checks, we're not targeting board seats, right? That's definitely not a condition. And it's only 2 of us, right? So it would be really difficult for us to get board seats in all of our investments. And then in terms of how we try to kind of add value and support those companies, I think the critical period for us is between when we invest and they get to that kind of next large investment round, where larger VCs come in, take up board seats, add a ton of value, and then we kind of can step away a little bit and focus on some of our more recent investments. To be perfectly frank, there's some companies where we participated in a hyper competitive round with very well known large VC firms, potentially in a company that's in a sector that we're not that close with, and we don't add a ton of value. We make an introduction here or there, try to help as we can, but they have a ton of support from some of the other investors. And then there's other cases where we're the best known, largest, or what have you, investor in the company, or it happens to be operating in a space we know really well, and we get really involved in terms of business development opportunities, helping to recruit folks, fundraising, things of that sort, right? So it varies a lot for us, but board seats is definitely not something that we seek out at Brainstorm. We did have a board seat at Open Table for many years and helped a ton there, but that was a long time ago.
That's great. That's great. Giving that perspective, that lay of the land. No, thank you for diving in there, especially now with all the focus you mentioned, future of work, that you used to focus on it. What are you stepping away from that? If so, why not? I'm curious.
In terms of future of work?
Yeah, the future of work investments.
I think that'll still be an important investment theme in Fund 3. And when I say future of work, I mean we kind of cover the full spectrum from white collar technologies that are serving kind of white collar type folks, all the way to technologies that are supporting frontline type workers. One reason is my partner Eduardo and I are, we're users of that technology, given that we had been operating more or less remotely, even pre-pandemic. And then I think the other piece that's important is, given our experience investing in brick and mortar, we kind of understand the needs of folks in the restaurant industry, folks in manufacturing. And, I think the number is like 90% of enterprise technology startups are focused on white collar folks that work behind a computer in an office. But the overwhelming majority of people that work in the world don't work in those types of roles. So there's a huge underserved segment that are only being served by 10% of enterprise startups, right? So we have a company, for example, that called Delight Tree, that is digitizing franchise operations. So you think about all the folks that work at a Burger King franchise or what have you, both the employees and management, and how do you make their lives easier and use software to make them more efficient and productive, and improve lines of communication, et cetera. So,
no, that's great. I worked on an edtech startup focused on training, more blue collar workforce, but hard to raise for, because a lot of companies they focus on the white collar workforce. So a lot of tension there. But as you're aiming to make an impact, but also build a financial business as well. So, what's next for Brainstorm Ventures?
So I think, like I mentioned earlier, we're starting to raise our third fund. We'll probably do another 5 to 9 or so investments out of Fund 2 in parallel. And yeah, I mean, we love what we do. We're going to raise Fund 3, do more of the same. There's, things have changed considerably in Mexico in the last few years. Even as recent as 2018, when we launched our second fund, there weren't really big US VC firms paying much attention to Mexico, or at least at the earlier stages. And just in the last couple of years, it's been impressive to see how many of the big funds, the Sequoias of the world, that are, going into Mexico earlier and earlier. There's a lot of folks that you're starting to see kind of the circle of life, where there's folks that were, engineers at a large startup in Mexico, and now they're starting to launch their own startups as entrepreneurs. And, the ecosystem is getting really interesting. And it's something that we kind of saw happening, but the last few years have been incredible. So, we'll definitely continue to invest there, as well as in kind of Silicon Valley and more broadly the US.
Awesome. Well, thank you, Ariel. For everyone watching, this was Rebel One Live, general partner of Brainstorm Ventures. And please tune in next week for our next guest. So thanks again. Appreciate your insight. And thanks everyone for watching.